the crisis in China?
Thank you, Li Gang. Well, if you want, you can turn to chapter 7. But you don't have to read it, because I'm going to tell you about the story. In essence, I have a good news and a bad news. The good news is that I think you all know already, the economy is coming back. If you look at the GDP numbers, the year-on-year growth was 6.8% in the third quarter last year. Fourth quarter last year, and 6.1% in the first quarter this year. And you probably already heard the statistical bureaus talking about 8% second quarter this year. And if you look at the quarter-on-quarter growth, it came up from below 1% last quarter in 2008, and probably 1.5% in the first quarter. So already a bounce back. And in the second quarter, we probably already have around 2%. So everything putting together, the good news is already out there, and China already walked out of growth recession, probably the first one in the global economy. And we know why. It's not because the global economy is recovering, but it's because of the government's capability in supporting growth. And I just want to remind you, when we talk about the government capability in supporting growth, we should think way beyond the fiscal measures. People talk a lot about the fiscal measures, 4 trillion yuan spending in 2 years, but you should focus more on what the government can mobilize in terms of the state sector resources and the monetary expansion, which I think actually played a much greater role in supporting growth. And that brings me to the bad news. The bad news is that we probably become more worried about the structural problem. For people who worry about sustainability of growth in China, now become more worried. People who worry about the structural imbalances, these imbalances become more serious. So for instance, you look at number one, people worry about investment as a share of GDP is becoming too high, and we rely too much on resource consumption, inefficiency problem, in investment, in consumption, in economic activities. You can look at each category of the problems in China we had a couple of years ago. They all became worse because most investment projects were implemented in a rush. And you can just imagine the return problem, the efficiency problem, and the sustainability of growth. So I think just the simple way to put it is the structural imbalance is certainly worsening. There's another problem coming with it. That's related to monetary expansion. Now, people worrying about the inflation problem, asset bubble in the US, in Europe, and so on. Because of the loose monetary policies. Personally, I think that's a less worry, but I think the issue is much more serious in China. Because if you look at the loan growth, during the first quarter, it's already like about 5 trillion yuan new loans extended, which was equivalent to the 4-year target for China. In April and May, it came down somewhat to around 600 billion yuan a month. But in June, we already heard it's again 1.5 trillion yuan. So that kind of liquidity we are seeing in the economy is worrisome. And the more worrisome is that the asset prices are already rising. You look at the stock prices, it went down to below 2,000 points last year, the Shanghai A-shares. Now it's already above 3,200. You look at the housing prices, it's booming quite drastically. You look at the auto sales, it's up by 50%. These are consistent with the upturn of the economy, but it's way beyond what the macroeconomic fundamentals can explain. And I think the one key reason, obviously, is the liquidity is driving the asset bubbles. People becoming more optimistic because the economy has already bottomed, because the global economy are showing some green shoots. We don't know whether these green shoots will become plants, but there are lots of liquidities already pushing into the market. So I think that's a key risk when you have too much liquidity, even though in the short term it does look like a positive for economic activities because it pushes the inflation, it pushes, improves the confidence. Consumption may improve, investment activities may improve, but I think the asset bubbles are running way ahead the improvement of the macroeconomic fundamentals, and I think that's the biggest challenge we will have to face. I'm not reaching the conclusion that the PBC will repeat the mistake the Federal Reserve probably made 10 years ago after the collapse of the IT bubble. But I would argue that it's very tempting when you have a problem today, creating another bubble and pushing up, lifting up the macro is very tempting, and I think a risk is rising in China. So take a step back. Well, China has been talking about the imbalance problems for about 10 years. The government has been implementing all sorts of policies trying to reduce these imbalancing problems, improving the sustainability of growth. But if you look back last 10 years, I would argue that most structural problems became even worse. Why? I think there are many reasons, but the one hypothesis I want to leave with you, and that relates to what Max just explained earlier, is that, and Fan Gang suggested earlier on, growth is very important. The reason why growth is important is because the government is very keen in maintaining social stability. In order to maintain social stability, there are many ways. You can provide economic security, or you can just simply push for strong growth, and push for strong growth is what the Chinese government did. And if you want strong growth, there are many ways you can do it. And I think if you look at economic reform during the last 30 years, you will find a very clear pattern in liberalization of the market. If you look at the products market, it's almost completely liberalized. And that's what my former colleague Justin Lin would call comparative advantage-oriented development strategy, i.e. allocate resources according to what your comparative advantage is and where the market demand is. But there is another part of the story. You look at the factor market, labor, capital, land, energy, and environment. You will find all these markets remain heavily distorted. There are many reasons why that's the case, but the conclusion is that factor prices are distorted and depressed, and according to our own calculation, that kind of distortion is equivalent to 7% of GDP last year. That's equivalent to producer subsidy. And if it's a producer subsidy, that certainly means profitability is artificially lifted. Investment returns are artificially lifted, and international competitiveness of Chinese products, I would argue, artificially improved. And if you agree with that, to that argument, then you certainly would agree that why we are seeing this very strange phenomenon in China. On the one hand, growth is so strong, and many people very, very optimistic. As some already argued, China would overtake the US within a couple of years, maybe 10 years. Other people very pessimistic. Structural problems are worsening. And I think it's related to what I call asymmetrical liberalization of the market. Product market is liberalized, factor market remain heavily distorted. The result is, on the one hand, you have very strong growth, but at the same time, you have problems in imbalances. And as Fan Gang mentioned yesterday, one of the consequences of that asymmetrical liberalization is that household income as a share of GDP dropped within 10 years from above 50% to around 40%. So if that's the case, how can consumption keep up pace with GDP growth? And that's certainly the imbalance problem is worsening. And I think that's one of the reasons explains why the surplus is certainly growing very rapidly. So how can we expect the adjustment in China in the coming years or decades? The government is doing lots of things, providing economic security, better security, social welfare benefits. I think that's very important. But until the factor market is completely liberalized, until the imbalance problem is resolved, the sustainability question will remain a question. Thank you.